Welcome to today's webinar, Optimizing Patient Finance in a Shifting Healthcare Paradigm. This is Ashley Myers, HFMA's Client Services Specialist, and I will be moderating today's session. Now it is my pleasure to introduce today's speakers. Tobias Mesker is co-founder and chief operating officer of Payzen, a technology platform using AI to enhance healthcare affordability and accessibility, advocating for transparent, convenient patient payments, and improved cash flow for providers. His commitment lies in bridging the gap between patients and providers, delivering mutually beneficial solutions. Robert Dewar is a seasoned healthcare executive with over 25 years of experience, having led initiatives to enhance revenue and cost management at top academic medical centers and integrated delivery networks. He is currently serving as Chief Revenue Officer at Geisinger Health System and has previously held leadership roles at APM Consulting and R1. And with that, I'll turn this over to Tobias.
Thank you, Ashley, for the kind introduction. I'm excited to do this session today with Bob, one of our longstanding clients at Geisinger. We're going to cover kind of our view of the state of the market on the patient revenue cycle. We're going to deep dive on kind of the pre-service aspect of the patient year revenue cycle and the impact that price transparency has had. And then we're going to talk about post-service as well. And then finally, we'll talk about the considerations and the conversations we have with health systems around, what to do in-house, what to do with a partner, and then considerations for kind of choosing the right partners in the patient revenue cycle. From our background, I think we don't have to cover much of an introduction. Maybe just a few words on Payzen. I'm one of the founders of Payzen, and we really started Payzen with an eye on patient affordability and applying our background. Our background is decades of experience in financial technology. So applying financial technology to patient affordability, and by doing that, improve financial results for hospitals, health systems, make the experience better for staff in revenue cycle, and also improve patient access and make the patient experience better. When we looked at this market, we saw, in the, let's say, traditional patient finance, there was a lot of financial engineering, but not a lot of kind of real engineering and technology that was brought to the problem of patient affordability. And we thought doing that can really unlock things for both providers and patients. Maybe, Bob, you can cover a little bit of background of Geisinger.
Sure. So Geisinger is one of the largest systems located in the middle of nowhere in the country. We have been around for 110 years, serving central and northeast Pennsylvania. And we, along with probably all of you, have experienced the growth in the patient obligations. And as we look around for help to help our patients and not get financially because they need our help, because they need our care, we look for various kinds of solutions that will help us in that way. And Payzen is one of the solutions that we've adopted and have grown with over the past couple of years. So it's a good thing to talk about and think about for your systems as well.
So if you go to the next page and kind of state of the market, I think, Bob, you already spoke about it. Patient responsibility continues to increase. I think we've seen the averages are pretty consistent in terms of what get actually collected on patient responsibility. It's right around 30%, I'd say, across the board for the hospitals and health systems we work with. And that puts strain on the hospital staff, obviously strain on their finances in a situation where hospital finances are already under tremendous pressure. And in this economic environment, specifically, we see that certain patient populations are really feeling the pinch of of this inflation environment and also of increasing consumer debt. So generally low FICO, low income patients are feeling the pinch now more, and that translates to lower repayment rates overall for their healthcare balances. I think, again, these statistics have been around for a while too. Many patients, even if they have insurance, are deferring care or avoiding care for fear of the out-of-pocket. I think now there's a good and positive effort around providing more transparency to patients up front about what their out-of-pocket costs will be. But that also begs the question, okay, so now that I know my costs, what's going to be the solution? How I'm going to be able to afford my care? Finally, I think this is more recent, and we see this at various levels of regulators, both federal regulators and state regulators. There's increasing scrutiny around what's happening in the patient revenue cycle. It has to do with what collection actions are permissible for a hospital to be nonprofit, and just in general for non-elective healthcare, what financial products can be offered. Definitely a focus on things like interest, retroactive interest in transparent fees, and also focus on, okay, now I have a medical bill that will be treated a certain way on my credit report, and I'm now converting it into a credit card and debt that will be treated another way. And then finally, the interplay with financial assistance is something that we see a lot, and we are very focused on, even as an opportunity for us to further invest and to further improve our product. Clearly, if a patient should be in financial assistance, it should be processed that way, and they shouldn't end up kind of in any of the other buckets, patient finance or bad debt. And then finally, one thing we realized by being in this market is in the patient revenue cycle, a lot of the processes still require staff, call center staff around guiding patients to the right solution, enrolling patients into the right options, and then even kind of behind the scenes, if someone is on a plan, dealing with things like adjustments, rolling up new balances, canceling plans because insurance ended up paying, reclassifying someone into financial assistance and canceling a plan, refunding the patient. So there's a lot of kind of processes in this general realm of affordability that fall on the hospital system's revenue cycle staff or on outsourced vendor staff. I think when we look at this overall, what all these areas have in common, especially with all the data that's available and what technology can do today, is that technology and automation can play a big role in, if not fixing, but at least mitigating all of them and making the situation better for both hospitals and their patients. If you go to the next page, we'd love to just get the audience sense on this. Brooke, if you don't mind going to the polling questions. Yeah, so just get the audience sense on this. Which of these trends pose the most significant challenge to your health system? And maybe while everybody's responding, Bob, I could get your perspective on, in the patient revenue cycle, what are the biggest challenges you're focused on there right now?
Well, before I speak to that, one of the points you made about care avoidance and deferment is that what we're seeing is that patients who have done that are coming to us finally sick, and as a result, they are higher levels of care, in some cases more care, or extended care. So it's really making the situation, it's sort of adding to the situation that they're in. So I think that for me, the fact that the rising balances and that there are not a lot of solutions out there are sort of what is the most worrisome for us. So I think I would really be on that page.
Excellent. And it looks like the questions are coming back, and it looks like that those two, basically the um, increasing patient balances and rates, and then staffing shortages came out on top. Maybe if we go just to um, our perspective, and Bob, we discussed this a little bit getting ready for the call. Um, Status quo in the patient revenue cycle is really not an option. I think there's a need to evolve. Obviously, things can't happen over time, so it has to be kind of a systematic step-by-step process, but definitely a need to evolve. Maybe just turning it back over to you, kind of what are the main initiatives that you're focused on right now and that you have going on in the patient revenue cycle?
Yeah. So the key, what we've realized is that, and I think that this is not earth-shattering, but we're far more successful when we move our um, um, collections to the front of the process. So basically, we have to help patients understand what their balances are going to be, if they're coming in for procedures or for some form of care, and then attempt to collect or set up payment plans at that time so that we don't have to worry about reaching out to them later in the process after care, after insurance billing, where it's far more expensive. So we're spending a lot of time right now in creating estimates, pushing those estimates up to the front of the process, emphasizing collections at the beginning of the process, or payment arrangements at the beginning of the process. Um, those are what we believe are going to be the keys to really driving. You can't ignore the rest of the process because there will always be payments. There will always be patients who want to be billed, who don't want to pay, all those kinds of things. And you need to continue with your traditional processes, but making it far more upfront is going to really be the hard.
Yep, that sounds good. And I think it's a perfect segue to our next page where let's talk about the areas of opportunity in the patient revenue cycle. So clearly what we see is kind of the traditional methods that were on the table, which is kind of outbound calling, post-service through an early out, or then bad debt collections are less and less effective. Fewer people want to engage that way, even pick up their phone. And then obviously for both reputational reasons and regulatory reasons, many of the things that were on the table kind of in the bad debt post-charge-off world are no longer on the table and no longer advisable. So a lot of the conversations do move up front. I think among the hospital systems that we work with, many of them have seen increases in pre-service collections, pre-service payments, and that's been a driver of improvements that they've been able to make in the patient revenue cycle. And as Bob said, it kind of comes to putting together a few things, giving patients a clear perspective around what they are going to be responsible for upstream of the procedures, and then also offering an option and encouraging things like deposits, payment method on file, or setting up a payment arrangement prior to the service. And then if we kind of move to the kind of post world, the traditional kind of billing statement type of cadence, what we've seen is that basically they're introducing extended options and offering it to the right patients at the right time can really drive meaningful improvements in overall patient payment adherence. And obviously there, the landscape is also very much evolving. I think there's a large number of vendors that are active in the patient revenue cycle, from the people that are sending statements to the early out, to people who deal with Medicaid eligibility, to the hospital's own in-house staff, and then we see just kind of various data providers, propensity to pay models, and then finally, especially in the Epic world, Epic taking a bigger ownership of the patient experience, and which presents an opportunity and I think a requirement, frankly, for everybody to plug into that. Basically, in the Epic world, kind of Epic MyChart's increasingly becoming the center where the patient is directed. So for all the vendors in the ecosystem, they have to make sure that they plug in there well and kind of integrate, and I'll say play nicely with Epic in that regard. If you go further and maybe just zoom in on the pre-service, because it was is a big topic of conversation. I don't need to, I think you all living kind of the regulation here, but I think two things maybe to say is number one, it's the right thing to do irrespective of the regulation. I think from a patient experience perspective, it's the right thing to do to let someone know, what they're responsible for upstream. And then also from a hospital's financial perspective, because if you're clearly communicating upfront, you're going to be more successful in collecting a payment there. So we don't see this trend around transparency and kind of these conversations moving upstream going away. I think it's going to continue. And what ties in there is the infrastructure that's built around it. I think if we go to the next page, the data and infrastructure around there is, I'd say it's still in its infancy. I think the Epic calculator is a good product. Coverage is increasing, but it's still not perfect in terms of who is covered on estimates and what the data is that's provided. And from the hospital systems that we work with, right now they still lean a lot on their staff in placing those outbound calls and some kind of processes behind the scenes. So the degree of automation in this front part of the patient revenue cycle is still relatively low in terms of self-serve things that are going out automatically to patients. So there's continues to be an opportunity. And then the opportunity that we've seen, talking to Geisinger and UTMB were our development partners for the card product. The opportunity we've seen was that create a payment option that's really made for this pre-service setting where you're not sure what the final balances will be, but you want to give the patient a peace of mind that they can afford it. They know what their monthly payment is. You'd like to charge a deposit or get a payment method on file upstream, so you have an easier time receiving payments once you actually send out the billing statement. So those were some of the things that we saw that led to the idea and development of our pre-service product. But maybe before I go into the product specifically, Bob, maybe anything to add around your efforts at Geisinger around price transparency and pre-service payments?
No, I think you hit it on the head. I've been getting messages that people are having trouble hearing me, so I'm trying to get closer to my mic and talk loud. And I think that what Tobias has been talking about is the journey that many of us have taken, and it's a problem that's going to take many solutions, and we tend to think about the ones who, many of us are in Epic, many of us are capitalizing on the way Epic has thought through this process. But even beyond that, there will be more that we need to do to engage patients in all the different ways they can be engaged and give them as many opportunities to pay as they possibly can have. And And I think that what we're talking about here is another one of those methods and opportunities.
Excellent. Yeah, if you talk about oh, polling question. Yeah, so I think one of the main things that we've seen different approaches is, how much you tie the process around providing estimate to the process around, encouraging or collecting payments. So, the question to the group is kind of how much have you tied that, and, how, I'd say, insistent are you on getting a deposit or a payment method on file prior to the service? One of the things, while you're completing this, that we have observed is that generally, if you have options to offer, you can also be firmer around the requirement of a payment method on file or a deposit. I think if you don't have options to offer, it's going to be hard to be firm around it, because patient's going to say, "What do you want me to do? I can't make this deposit right now." So bringing in options, and like a host of options, not just a one size fits all to this process, it's been helpful. Sounds like kind of where the group is shaking out is that they encourage but don't require a payment or payment method up front. I think, just in the interest of time, we can skip past that page and kind of go to the next one. I think when we just talk a little bit about what I guess not so easy to script. So I'll just hit it at a high level. I think we mentioned up front, right? Care deferment is a topic that everybody deals with. It has the implications that Bob mentioned on, the patient health outcomes. It also has financial implications for the hospital system, if they, rather than having a scheduled procedure, see someone in the ER later when things have gotten worse. So, our question to pulse the group really is, how often do you see like appointments being canceled or services not being pursued because of financial concerns?
This can be a hard one to estimate, but based on when you speak to registrars and schedulers, you get a sense of how often their patients are putting off care. It's hard to get an exact number.
Yeah, I guess that's reflected. There's a significant portion I'm not sure, and then kind of people clustering around sometimes, meaning, yes, it's an issue, but yeah, exactly. We probably not sure how often it happens. I think if we go further, really, I think our approach generally to building any technology at Payzen is work closely with hospitals' health systems in developing it. We don't believe in just building it in a vacuum and then come into the market and say, well, what do you think? And so really, a few things that informed our approach to the care card was one of this conversation that we just had, like an ability to give patients an option upstream when they're presented with an estimate, an option that is flexible in a sense of like when things are charged, so it can ultimately accommodate the whole estimate or even a bit more, but it can allow for things like a deposit and various balances coming in over time after the service. For the patient, something that gives them peace of mind, and they know, okay, I have an affordable monthly payment that I can budget with. I know I can do this procedure. So in a way, the way we market it to patients is a payment plan in your pocket. So swipes on the card, converting to monthly payments. I think, one of the things that we fully learned to appreciate working with Geisinger is that there's a multitude of ways where a card can be run. There's a online checkout for the patients, there's the POS devices, there's various places across the health system where this can be run. So, building this product on just a normal card rail so it could be run like any other debit card in the system made it just easy to have kind of broader applicability. And then finally, I think because ultimately the payment options that are offered to the patient are a benefit that the hospital is providing to their patients. It was important that it's co-branded, so it's both branded to the hospital system and Payzen, since we're creating the card, and that way it drives loyalty, and the card only works at merchant IDs at the given system. So it works in various places at Geisinger, from the pharmacy to the physicians to the hospitals, but it doesn't work at a competing health system or like another outside pharmacy, as an example. Clearly we're continuing to iterate. I think our general philosophy in this is get a product out that's good, that's making an impact, but then also continue to put development and engineering resources behind it and optimize. And one of the things that we learned we didn't know up front is really how much the card is should be offered up front. I think for the post procedure, when there's a balance, I think generally the patient behavior is more like a plan, paying it over time, kind of taking care of the balance is kind of more the mindset. I think the card really, we see the best adoption when it's offered prior to a service. Bob, maybe anything you can add kind of based on your experience kind of with us and actually the dialogue we've had with you and your team over the past several weeks.
Right. So it is an iterative process. So we rolled out the card, and there was quite a bit of interest in it. This is financially a very conservative area. There's a significant portion of our population that pays cash. So, but even with that, as people got accustomed to seeing this idea and using this idea, we have seen it continue to be adopted and to grow. Not as fast as we would like necessarily, but it is being adopted and is by the users. It is the reaction is positive.
Yeah, no, that's right. And I think that those are, as I said, exactly the optimizations around how exactly is it offered, how exactly is it explained, that will ultimately, get even higher adoption on the card. If we maybe go now from kind of the pre-service world to more of the post-service world, I think, generally speaking, there we have kind of these various places that a patient can go, right? Now, obviously, the preferred way is pay in full, and so any solution that comes in on top of what's currently there needs to make sure that patients that are likely to pay in full are still going down that route, since it's economically the best way for everybody involved. I think every health system we work with offers in-house payment plans. I think where systems vary is in how much they constrain those. I think everybody has some sort of constraints on how long they're willing to go out. I think Geisinger is on the more generous side with, I think, up to 36 months. We've seen other systems at up to 12 months. And I think that, and we've seen certain surgery groups, physician groups that just don't offer it at all. I think those are the bookend of the spectrum. I think what in-house arrangements I think have in common is that usually they're mostly driven based on the amount. So up to certain amount, you can pay in this many payments, up to a certain amount, you can pay in this many payments. So not necessarily tailored to what the patient's true financial profile is like, and what they can afford on a monthly basis. And then I think there's varying practices around the ability to self-serve on them. I think, Epic clearly has a way to set up some basic functionality on payment plans in MyChart to self-serve, but many of the hospital systems we're dealing with or we're working with actually require still a patient to call in, and kind of the call center or the early out is kind of the primary way how patients get into payment arrangements, and by nature is reactive. I think, if you go to the next page, like the opportunity to add something to the mix isn't to replace anything that's been done in-house. I think generally, when we come in, we say, let's see, your payment options go out to a certain amount, at a certain point in the billing cycle, statement 2, 3, at some point your pay in full population will have paid in full largely. Now is the time to offer kind of some additional options to patients, to get like those patients that, want to pay and can pay and will pay if you make them an offer that works for their budget. And so that's kind of where our payment plan product is slotted in. And I think, generally speaking, that's probably the value proposition of most players or people we compete with in patient finance. I think one thing that we found is like a big driver of adoption really is how proactive and targeted are you around it. So do you have kind of digital engagement that lets patients know that these options exist? Do you have tailored and specific offers to make to the patient that work for their specific financial profile? Do you make it easy for someone to enroll, ideally in the place that they're already at, such as in MyChart, and they can complete the entire process the same way they're used to, let's say in an e-commerce setting. And then kind of how is the whole thing orchestrated? Can you like configure, this is what a hospital still wants to retain in-house, and this is where it makes financial sense for them to keep it on their balance sheet, and this is how it makes sense to layer in the partner. I'd say the most common discussion we've had more recently with our larger health systems is around the interplay with financial assistance. Knowing that you're offering this to people that, likely are not the people that need to go to financial assistance. And even if someone went down the quote unquote wrong path and they're set up for a monthly payment arrangement, and after the fact, that they qualify for financial assistance and it's documented, how do you put them in the right place and make sure the patient is made whole? And I think generally the degree of automation in the financial assistance process is an opportunity overall. That, as we think about where our product can expand, that's kind of one of the areas that we think a lot about, and think we can add significant value. I think, Bob, as you're thinking about, I think you guys have looked at various things. Obviously, everybody in the market is pitching you the solution. I think, we have some quantitative discussions with your team to see like, okay, how exactly to optimize the whole picture. And then maybe like some high level thoughts you can kind of share on that, and the lens that you take to this.
Yeah, I think we continue to search for the best answer, and maybe we never stop searching, because even as we get more people to try more different techniques for paying earlier in the process, there will always be some cases that are difficult to capture, and we just haven't necessarily found the right way to engage them at the right time yet. So I think it's a never-ending process, and all that we all need to keep testing and experimenting, and with different tools at different times in the process. it definitely seems though that the further upstream you get, the more successful you are in collecting as much as you possibly can from patients.
Yeah, that makes sense. I think, one of the things that we wanted to implant as a DNA is that we're kind of doing the analysis together with our providers. So not necessarily kind of pushing any particular solution, but looking at, okay, what kind of makes sense in the overall mix, and iterating and get started one way and then, change things to another way if that's what the data and the experience suggests. I think that's the right way to just kind of iterate together about the right mix rather than kind of just pushing one particular product or method. I think if you go to the next page, I think one of the I'd say like education we do and analysis that we do together with our various health systems is getting kind of a full like true view of what the costs are of in-house plans, because it's not that if you enroll $1,000 in in-house plan you're going to end up as a health system with $1,000, right? Especially for kind of longer dated plans, a significant portion of payments are not going to be collected. And from us coming from kind of more of a financial services background, we were like, oh yeah, you need to look at it on a cohort basis. But we see a lot of the default reporting that's built into the systems, or a lot of the ways people are talking about their recourse rates. They're kind of blending the entire portfolio together, and really to get a view of truly what the rate is. They go back, like, let's say, to a year 2022, go like 1.5 years back and see how payment plans you created in 2022 have done kind of as they either completed or like almost towards their end. I think it'll give you kind of a picture of what the I'd say matured numbers are and what you're truly realizing on in-house plans. I think the other part's capital costs. Obviously, environment 2 years ago, it was not really a factor because capital costs overall were extremely low, so not something that someone would think about. But now with interest rate levels where they are, it's a factor that should be taken into considerations. And think a good proxy is what is the health system paying to bondholders on the bond market. I think is a pretty good proxy around what directionally the cost of capital are on these. And then administrative costs. I think there's things like payment processing costs. Since many of these are card payments, there's like 2 to 3% right there. The cost that the early out gets paid for taking the calls. So really, I think if you in the search of the objective answer, I think one good starting point is what is my true cost of what I'm doing in-house, and then comparing it to the various options that you have available outside.
Yeah, this is a perspective that has been valuable to us. So we were thinking more as sort of traditional customer service operators as opposed to people who are managing an asset. And you really have to have both perspectives to be effective.
That's right. And I think each so these are not the numbers of anyone in particular. So not Geisinger, not any particular system. These are the averages that we've seen across everybody where we've done the analysis. So, your actual experience may be one way or another. And this is just to be specific. I think it's not labeled that way, but it's for plans over 12 months. I think it's pretty clear that there is some less than 6 month, less than 12 month, some place where it makes full sense to have these plans in-house, because capital is coming back quickly to the system, losses are relatively low. And I think the further you go out, I think the more you have a case to say, okay, I really need to look at this and see if the economics make sense. And it has these same three components that we talked about. default rate, kind of looking back in time, cost of capital, and then administrative costs early out, payment processing, any internal additional costs. So the net of it is that it's a little more than half, I think, in a optimistic view that you get from like 12-month plus plans once all is said and done. And obviously, you have various options available to complement your in-house plans and look externally. And, I think from our perspective, if you go to the next page, from our perspective, there's a number of questions to ask, but maybe before, just get a pulse of the group. Have you considered bringing in a patient finance option? Are you using one today? Have you decided against it? Which would be great to get a pulse here. Think what, maybe we'll keep talking while we're collecting the results. I think one thing that we found is difficult, that there's so many different models out there. So really, how do you standardize and compare, like get to an apples to apples comparison of, like, everybody has, oh yeah, this piece sounds great, but then there's this piece that's a question. So really, how do you get an objective view around what's available to you? And I think, I think the first question that we encourage someone to ask is like, how additive and how incremental is it to my baseline, right? We've seen, just to give an example, right, like recourse programs through a bank that, the headline pricing sounds fantastic, but then when you look into it, we talked to a health system very recently that's a $1 billion+ system. They did, like, over 1.5 years, they did 700,000 of payment plans with that solution. So clearly it wasn't meaningful to them at all. And I guess it's kind of pretty evenly split between a few buckets here. Guess I'm not sure is one of them, but then the next two are like, you have considered but not decided, and then you currently are using somebody, and then some minority that's decided against it. But yeah, I'll say, like, I think the big question is, how additive is it? Is it kind of is it worth the effort? And I think the more someone can share, like, how they're going to bring the additional patients to the table, and how that's going to run independently of kind of your staff having to do all the hard work of signing up, I think the more confidence you can have that it'd be more significantly additive. And then really the other point is kind of the apples to apples comparison on your balance sheet and on your pricing. I think, obviously the very common model in the traditional model is to do it on a recourse basis. And I think there you have, a rate that captures part of it and captures the capital costs and the cost of the platform, but it doesn't capture the other part of it, which means the repayment risk that you're still responsible for, and has the same dynamic too, that in a growing program, the recourse number is going to be very low because it's all new plans that don't have losses yet and haven't entered recourse. And as the program kind of matures and is more stabilizing, the number goes up. So just something to keep in mind. And then, there's a way that people have used to just shift the burden to the patient, either by charging interest or fees, things that I think regulators right now don't look on kindly, or by just severely restricting the options that are available, right? It's easy to say, okay, the headline rate is great if all I do is offer options up to 12 months. Well, that's, or I approve only 50% of the patients. Those are the patients that would pay the hospital anyway, right? That's easy to have a nice headline rate there, but you're just cherry picking kind of the quote unquote best creditors on top. So really, I think it's worth going kind of a couple of steps down here and understanding the differences between the models. I think where we've actually increasingly shook out is that we think the main value we deliver is through the technology. Number one, getting more patients to pay that would have otherwise gone to bad debt, either by getting them set up on a payment method pre-service or catching them in the process before bad debt with a relevant offer. And then making sure that if someone is on a plan, they are successful in making their monthly payments by tailoring a monthly payment, by having various techniques and technology around servicing. So if someone's off track, make it easy for them to self-serve to get back on track. I think that grows the pie, and then the financial product flows from it. I think, all of our customers right now chose our non-recourse product, where we basically take on the loss risk as well, and we take it off someone's books, we post it back into the system. But honestly, the more we evolve, the financial product should be more of a choice of the health system to say, do I want to go the non-recourse route? Up to what terms do I want to do that? Do I want to have a recourse route and kind of continue to carry the risk, but maybe have a different headline rate? Or like in some states where there's particular regulation, we could just service and run the payment plans on behalf of the hospital system without any financing. Our technology platform is agnostic, and I think that's probably a bit of the different approach we take. Like, we're primarily taking a technology lens to it, and think if we grow the pie, that's the primary value, and then the financing product is more kind of a secondary value proposition and choice for the health system. Anything to add here, Bob? I've been talking a lot on this, and obviously you're on the other end of the table on a lot of these conversations.
I was intrigued by the results of the last poll, which showed that something on the order of a quarter of currently use a partner in this space, a financing partner in this space. Some more have tried, but have dropped off. I don't see the numbers in front of me at this point, but I think there's a lot of room for this kind of product to be explored. That's what I'm seeing in that data. And, it does take, you have to be careful, you have to be thoughtful about your population, what you know about your population. You have to choose the product and the partner that you think is going to be best for your environment. And you have to keep testing and tweaking and working out what's the ideal way. And that will change over time as well as you get as economic situations change, as you branch out into different portions of the market, as you offer different services. You have to sort of keep tweaking and experimenting and watching over it. So it means that you have to have good metrics, good data. You have to have smart people looking at those numbers and making sense of them. And you have to be agile in terms of adjusting to meet the needs of a particular population. But it is definitely, it might sound complicated, but it is definitely an important piece of any patient payment solution.
Yeah. Maybe before, I think we are about to at the time to just take questions from the audience. Maybe just quickly hit, a few takeaways from this. I think, one clearly was that status quo is not an option. I think in this landscape with this many pieces moving and these financial pressures, I think the patient revenue cycle has to adjust as well. I think, we talked about combining kind of the pre-service efforts around price transparency, around estimates, with an effort around patient payments and options around patient payments. And then I think in the post-service world, we talked about, okay, what can you add to the mix of things that you currently have on the table? And then finally, as you consider these kind of third-party options, there's definitely various trade-offs. I think, one thing that we've seen is like truly look at the end-to-end impact to your overall and what's going to be most additive to you. And I think, look at the type of partner as well that you're working with in an environment that's rapidly evolving. Is a partner evolving as well? Are they putting the investment kind of behind their technology and behind evolving? But with that, let's open it up to questions, see if there's questions from the audience.
Thank you so much, Tobias, for that engaging presentation. It was super informative. I would like to invite those listening to enter your questions into the Q&A box located on your computer screens. I'll start with the first one. Let's see. How are payments or lack of payments tracked by Geisinger? When a payment enrolls in the card, is the AR adjusted off or marked as paid? Bob, I think that one's for you.
Tobias, I'm actually blanking on this.
No, I can fill it in. So on the card, basically, the full payment comes across, and if someone enters in Epic My Chart as an example, it shows as fully paid like any debit card would. And then there are losses that we take. There's cost of capital. There's cost of providing the service. So we basically invoice that. To Geisinger, and Geisinger pays us on a monthly basis for that.
The next question reads, how does Geisinger track these dollars on their various dashboards, and how are these funds and the patients connected to them tracked at the RCM and board levels?
The payments are tracked. They're patient payments, and so on our patient payment dashboard, they are shown as a resolution of patient debt. I don't think that I don't think we report on this level of detail at the level at all. It's much more just on our outcomes dashboards that we share with finance and with operational leaders in the organization.
Yeah, and I think, Bob, with your team, with every provider's team, we provide all the data to kind of reconcile, okay, here is what happened, here's what was paid, here's what was invoiced. So, in Bob's team, we kind of work with them through that, and we provide kind of line by line details around that. So an easy way to kind of audit that everything's going right.
We're really measuring how we're doing on resolving patient balances, and to the extent we're seeing that trend going up, we try to do more of the same, and when we see it declining, we try to figure out, okay, what's going on, and what other techniques, what other tools do we have that will help us to maximize the patient balance resolution. It's a constant dance.
Thank you. The next question is, does Payzen require patients to have a credit card or set up auto payments in order to participate in the program?
Yeah, so to participate in the card in the post-service program, we require two things. One is automatic payments, and the other one is a payment method on file. So we do require that. We don't require a credit card. In fact, we accept it, but we don't encourage people connecting their credit card in the back ends, because otherwise it might just get them in debt in another way. So we typically encourage debit and ACH, and FSAH is safe, it's available.
Can you give some examples of ways for patient financing?
I'm not sure. That's, I guess, let me let me just creatively interpret the question. I'm not entirely sure if I'm going to hit it, but if not, let's just ask it again. I think maybe some things around like our card product, right? It's 100% of patients are approved. There's no fees or interest to the patient. So essentially, the way it's sponsored is by the health system based on those factors that we discussed. And so really, it needs to be targeted at the patients who need the extra help, which, if someone's on a call, they can triage. Obviously, they're going to ask for pay in full first before they offer the card. So I think those are some examples about how our products are offered. I guess that's how I took the question. If it's about who else is out there in the market, I can briefly talk about that as well.
We'll wait to see if there's clarification that comes in for that. I'll take the next question. It says, do you ever encounter patients who have been injured in car accidents by someone else and have third-party liability claims, and how do you handle those?
Yeah, we don't. I mean, essentially, we plug into the source of truth of the health system, right? I think if there is a third-party liability claim and for some reason someone ended up on a card charge or a payment plan, basically the health system has an option to kind of unwind that and recall the balance and resolve it that way, right? I think one thing that we've built a lot of automation around as a consequence of working with larger and larger health systems is just how to do that process without putting a burden on staff and how to just plug in directly into the EMR, EHR. But yeah, so our process for us would be, soon as we know that from the health system, either because of something we see in Epic, let's say there's a big credit coming in, or someone's recalling the plan, we unwind it, we refund the patient, we put the balance back to the health system, and they can basically resolve it through the accident insurance.
Thank you. Do you have any closing remarks?
No, I mean, other than thank you for the I know everybody took time out of their day to listen to this. Thank you very much. And see, if you have questions, you know how to reach us. We'd love to tell you more.
Actually, I do see one more question. How does Payson compare to Care Credit?
Oh, it's my favorite question. I think, no, seriously, I think obviously for non-elective healthcare, I think, Care Credit has been quite a bit in the spotlight by the CFPB around certain practices around interest, retroactive interest fees, and also declining a good part of the patient population, right? So we actually are in a conversation with the health system right now of unseating Care Credit. And, the main argument was like, look how little patients enroll in Care Credit, given that you're that largest system. And that's because you're declining a lot of them. You're requiring them to sign up for a credit card that's a lengthier process than ours. And then the credit card has interest, retroactive interest, all these things, which we don't, right? For us, enrollment's very quick. The card never has any fee or interest to the patient. You approve 100% of the patient. So when you offer it, that it works. Our solution really is purpose-built for kind of non-elective healthcare, not elective healthcare, and then kind of try to make fit for, it's not a product that's built for dental and then try to kind of modify it a little bit to see if it works for hospitals. We will really build our product for hospitals and physician groups that are part of hospitals.
Thank you, Tobias. I have one last quick question, if we can give it a go, Bob. At Geisinger, what type of educational efforts did you use to reach out to your stakeholders?
We did several things. One is we made sure that our leaders, I'm getting an internet connection unstable, I apologize for that. But we made sure that the organization knew about this plan and what we were doing. So we made sure that leadership understood it. We trained registrars in how to explain it, how to highlight it, etc. And in terms of educating the patients, the materials that Payzen offered were really simple, to the point, and very clear. We made those available at our patient, at our registration locations. So that was one of the options that was easily available to them all. And we found that those materials really were quite explanatory and did the trick for us.
Thank you, Bob. And with that, we have reached the conclusion of today's webinar. I would like to thank our speakers for presenting and Payzen for sponsoring. We hope you have found the presentation informative. Thank you for your participation and have a great day.